when we meet, I show you how I design these. I show you why I design them the way I'm doing it, and I walk you through step by step on what makes this a well-designed policy. And one of the keys to that design is minimizing the agent's commission in order to maximize the cash flow that your policy gives from day one. And it actually increases the cash flow, not just that first from the very beginning, but every year thereafter. And I constantly get people going, okay, I get that, and that's great, but why? Why are you doing that? Like, this seems too good to be true. Why would you do that? Why limit your commissions like that? Well, it's still good commissions. I mean, I was looking at a policy design that somebody had designed from another agent, and the commission that policy was going to pay the agent was over $40,000. The commission, I designed that same policy, and the commission was about $3,000. I mean, you're talking a big difference between commissions. And it doesn't take very long to do this. Like, I don't have to spend a month putting together a policy for you, getting to know you, figuring out your situation, and then designing the policy. That does not take all that long. So why do I need a $40,000 commission? I mean, yeah, it'd be nice. Not going to turn one down if it was forced on me, right? But I don't need that. You know, when we're talking about from a business perspective, or let's say an hourly rate, like I put all my content out here on the internet and on YouTube so that you guys can learn how to use these policies and what you can expect from them and why I sell them, why I promote them. My goal is that you're going to know as much about these ultimately as I do. Like, I try not to hide anything when I put together these videos. And so when we end up meeting and getting together and taking that next step into looking at how this policy might fit into your schedule, it doesn't take a whole lot of my time to get the picture from you, the financial picture of yourself, and then figuring out if there's a place for these products in that, and then designing it and showing it to you. So I might spend a few hours talking with you, going over your financial situation, and designing a policy. I don't need $40,000 for spending a few hours. And then we got an hour to put together the application, and then maybe another hour, you know, to get it through underwriting and deliver it. It really doesn't take all that long. So let's say at most 10 hours, start to finish on a policy, okay? 10 hours start to finish. If I made $40,000 commission on that, that's like $4,000 an hour. Sorry, I'm not worth that much. I don't think most people are worth that much. I wouldn't feel comfortable paying somebody $4,000 an hour for multiple hours just to do something like that, design a policy. Now, ultimately, if you get the right design policy, it can certainly be worth it. But if you're giving up $40,000 to somebody, the policy's not going to be designed well enough that it would actually be worth that. It just isn't. It's so much more. It's so much more of a beneficial product from out of the gate if it's designed correctly. Something that I like to point out. Why doesn't everybody do this? I get asked that question too. Why doesn't everybody do this? Well, you get a lot of people out there that have had bad experiences with these policies. They get badly designed policies that they're committing too much money to, and ultimately, if they stumble financially, they may have to give up the policy. They may have to let it lapse. They're not going to be able to afford to make those payments. So if somebody's putting $12,000 a year into this policy, let's say they start a policy with you, you convince them to put in $12,000 a year, and that might be a stretch for them, but they see the potential, and you've made the policy sound really great. But you designed it badly with a high commission, and they have no cash value in the first year. Sure, this thing will look good 40 years from now. They'll all predict to look really good 40 years from now. And that just might be the case. It might turn out just fine 40 years from now. But if they stumble financially in that first year, and now they have a trouble meeting their other financial needs, because there's no cash value in that policy, they may have to give it up. It might lapse. And now, when they're talking to their friends and family, that's going to be a story that is not a good thing for IULs. They're going to say, that was the worst decision I made in my life. I lost $12,000 because I bought that, and then I got into financial trouble, and I couldn't make the payment, and it lapsed. And I had so much surrender charges, it just went away. I didn't get anything back from it. So that product in that situation would be a massive burden on that person who originally got into it thinking that it's going to be a good deal. And they probably didn't think that they needed access to that money right away. And so you as an agent might have thought, I'll be okay taking this nice hefty commission from this person because they're going to be fine in 40 years. This policy is going to be great for them. But they never made it that far. Now let's flip that around. If you design the policy to best meet your client's need, minimize your commission, it's still a good commission. Like on that one example, $3,000 commission, if I'm spending 10 hours, that's $300 an hour. That's still more than enough. That's still more than enough. And, I bring these down and minimize them as low as I can because they do have limits on how low I can make it. So if you design it properly and they have, instead of no cash value in the first year, they put $12,000 into it, and maybe they have 8 or 9 or 10,000 available in that first year. Now, if they stumble financially, they can look to that product as support. That product can actually save them from their situation because of its liquidity, because we gave them the ability to be able to access those funds. So yeah, they put a lot of money into it, but it wasn't illiquid. It wasn't locked up. Like a lot of people with retirement accounts, you're always told, commit as much as you can to your retirement account, get that pre-tax savings, and people end up putting a lot of money into their retirement accounts, oftentimes too much. They stumble financially, and maybe they don't have access to that, and now they're stuck. Now they have to get at it, and they have to pay a 10% penalty. That happens all the time. And so people that thought that they were doing good by putting this money that's going to get locked away for 20 or 30 years, now suddenly they need it because an emergency came up and they weren't prepared. And now they've got to pay penalties. And so not only did they have an emergency, but now they've also got to pay penalties on that. They're going to have to pay taxes on it when it comes out. And so it just compounds the problems that were created by whatever caused that emergency need. So if we design it properly, and now they have a product that the cash value is liquid and accessible even in that first year, even within the first 30 days of beginning that policy. Now people can feel more comfortable committing larger amounts of money to these products that have really great guarantees and really good growth opportunities. But if they stumble financially and they can use that to help support themselves, now that conversation with family members becomes completely different. Now, instead of it being the worst product they'd ever bought and they'd never recommend it on that anybody get it, now this is a great thing. Look at how well this is performing. And when I had my troubles, when I got into financial trouble, I was able to access that cash value and it saved me. Like, I was so happy. That was the best purchase I've made. You see how that conversation changes? It becomes a whole new outlook toward these types of products. And now suddenly you might have more customers, more clients. So by designing these to optimally benefit the client as opposed to yourself and your agent's commission, you're going to be able to turn that into more opportunities down the road. You know, yeah, you're not going to get paid as much. You're going to get paid as much per hour of your time, but it'll be okay.
Hope you found value in today's video. If you'd like to find out more about IUL and Whole Life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.